What is going on, my friends? Ryan Williams here, back with another one. And today we are going to be comparing two legendary dividend stocks that I guarantee many of you guys have in your portfolios. You may just have one of these stocks in your portfolio, or you may have both. Either way, there is no denying that these two companies are absolute behemoths. And today we're going to compare them side by side and take a look at some of the stats behind both of these companies, like the share price performance, the current valuation, which, spoiler alert, I think they're both overvalued, and also the dividend stats to try and determine which one will make for a better investment if you had to choose between the two. So that's what we have coming up first, and then later on in this video, we will be getting into a little Q&A where I'll be answering some of your questions, like which stocks I will be adding if we ever see a market crash, and I'll also tell you guys a little story about my investing journey and how it began. Anyway, before we get rocking and rolling, if you guys are stoked to talk about some awesome dividend stocks today, then go ahead and give this video a big thumbs up. Also, guys, leave me a comment below and let me know which stocks you guys would plan to buy if we ever do see some sort of stock market crash or stock market correction. I'd be very curious to hear your take on the subject. And I'll tell you what, the two stocks we're talking about today, that's the only way I will be adding them to my portfolio, is if we do see some sort of stock market crash or correction. Anyway, thank you so much for doing that. I really appreciate it. And now, without further ado, let's get into it. All right, guys, so we are here on the homepage of Seeking Alpha, and what we are going to do to get the stock comparison pulled up is we're actually going to use the tool that Seeking Alpha has to do just that. So we're going to go over to this premium tab right here, compare stocks and funds, and we're going to create a new comparison. And I'm going to spill the beans right now, guys. The two stocks that we are going to be talking about today are none other than Apple and Microsoft. Now, you guys have heard me talk about Microsoft on my channel before. That was one I've been having my eye on for some time now, but I've never talked about Apple really in depth, I don't think. So that's what we are going to be doing today, is comparing these two companies to try and determine which one would make for a better investment if you had to choose between the two. So let's put Apple right in here, and then we're also going to add Microsoft, and then it's going to pull up a ton of stats for both of these companies. We're going to be able to take a look at them side by side, which is super convenient. So as you can see, all of this data is pulled up here, and we're just going to run through from top to bottom and point out the interesting points to make a comparison between these two companies. And then after that, we're going to jump over and dive a little bit deeper into both of them to compare the balance sheets and the cash flow statements for Apple and Microsoft. So kicking things off, guys, obviously we have these two pulled up here. I want to scroll down now and take a look first at the total return right here. So in the last month, Apple has absolutely crushed it, okay, compared to Microsoft, who is down just a little bit in the last 30 days. But, you know, that's the short term. If we zoom out a little bit farther and look year-to-date return, it looks like Microsoft is taking the cake with a 51% return year-to-date, which is basically the same as the last, 365-day return, the year return, compared to Apple's year-to-date return of 32.37%. So Microsoft is beating Apple just year-to-date by almost 20%. And if we do compare the one-year return for both these companies, 58.59% return from Microsoft versus a 44.22% return from Apple. So it looks like Microsoft is outperforming Apple in the last 365 days by about 14%, which is pretty substantial. However, with that said, guys, if we zoom out and take a look at the 10-year return for both of these companies, both are incredible. Both over like a 1,300% return in the last 10 years, which is insane. But to be fair, Microsoft has still outperformed Apple in the last 10 years by, 153% or so, somewhere in that range. So while both companies are doing really well, we're going to have to give the total return, I would say, to Microsoft for this one. And then moving on to the next point, which is very important, the dividend. Now, both of these companies do seem to act more like growth stocks because, like what we just saw, they both do really well in terms of capital appreciation. But for both these companies, like, there's really not too much going on in the dividend department, although they are pretty reliable dividends, which we'll see in just a moment. But in terms of the forward dividend yield for both of these companies, Apple is sitting at a 0.5% forward yield, and then Microsoft is 0.74. So really not much of a difference between both of these two. They're both below 1% dividend yields, which is nothing to write home about whatsoever. However, both these companies do have a really low payout ratios. So the dividend is really not something that is causing a lot of financial stress for either of these companies right here. They both have a lot of room to continue contributing to the dividend and also growing the dividend, which it does look like they're both doing a pretty good job of that. The 5-year CAGR for both these companies is very similar, just over 9%, and both of them have pretty nice consecutive years of dividend growth, although Microsoft does have one that is twice as long. So Apple has been consistently growing their dividend for the last 9 years, which we can see right here. and then Microsoft has been doing the same thing for 17 consecutive years. And overall, guys, once again, I would give the dividends to Microsoft. A little bit higher yield, okay, a little bit higher growth rate, and then also twice as many years of consecutive dividend growth. But I don't doubt that Apple's going to get there as well. Apple doesn't seem to be stressing the dividend at all, like I was saying. Low payout ratio, they've got a ton of free cash flow, which we'll see when we take a look at the cash flow statement and stuff like that. But I don't think the dividend is at risk for either of these companies, guys. Now, scrolling down, let's take a look at the valuation. Now, I think we're gonna find with both of these companies, it's not great. It's not at any sort of discernible discount. But like I said, both of these companies do seem to play more like growth stocks. So seeing a PE ratio that's under 20, it's gonna be hard to find. It's gonna be hard to find for both of these companies. Now, looking at the forward PE ratio right here, Apple has 30.62 and then Microsoft 36.34. So both have pretty high PE ratios. And if we scroll down, take a look at the price to books, man, Apple's is considerably higher. 45 for the price to book. That is very high. And then Microsoft's is also pretty high, 16.46, but it's like a third of what Apple's is. Now, this is pretty high in its own right, but this is just not even on this planet. That's how high the price to book is. It's unreal. And then both also have a really high price to cash flows. Now, you guys know we like to see the price to cash flow if we're looking for a discount in the single digit range. I also think that's going to be pretty tough to find with both of these companies just because of how expensive they usually trade at or have been trading at historically. And with all of this said, guys, if we had to pick a winner for the valuation, I'd really have a tough time choosing between the two. I don't want to give it to either of them, to be honest, because I think they both, just based on these three metrics, the PE, the price to book, and the price to cash flow, are looking pretty expensive to buy. But like I said, that's a little bit more expected because they do seem to act more like growth stocks versus dividend stocks. If this was a different company like Altria Group or like an LVG, like the companies that we talked about in the last video, guys, these numbers would be a lot lower. But two different companies, so you got to look at them a little bit differently, right? All right, and with that said, let's now scroll down and take a look at some of the growth metrics between these two companies. So revenue growth, year over year, they're both doing pretty solid, although Apple's is considerably higher, 33% revenue growth in the last year, and then Microsoft's is almost 20% in the last year, but both doing really good. And then both, I mean, if we zoom out across the last 5 years, neither is looking bad. Apple has a 5-year revenue growth CAGR of 11.15, and then Microsoft's is 15.2. So both are seeing some very steady revenue growth across the last 5 years, which is great to see. And also comes as no surprise because both of these companies, like I said, are just absolute behemoths. And then going all the way to the bottom right here, taking a look at the levered free cash flow across the last 5 years, the CAGR there is also pretty respectable. 15.57% for Apple and then 19.46% for Microsoft. Just like with the valuation, guys, it's tough to pick a winner here for growth because I think they're both growing pretty steadily, and I'm very happy to see that. All in all, guys, I would say that both of them are doing great as far as growth, both in terms of revenue and free cash flow. And I think we'll just leave it at that. Now, scrolling down, guys, we are not going to look at the balance sheet or the cash flow statement right here because we are going to go over and actually do that on this page right here. So I have the balance sheet pulled up both for Apple and for Microsoft. And just starting with Apple, guys, I want to scroll down first. I really just want to take a look at the shares outstanding and the debt and see how that's moving. So starting with Apple, the shares outstanding going down pretty steadily. That's a really nice steep slope downwards. So they're buying back shares pretty aggressively right here. And if we look at the same metric with Microsoft, guys, scrolling down, we can see that they are buying some shares back, but it's really not as aggressive as Apple. Although with that said, I do believe earlier this year, Microsoft announced a pretty nice share buyback program. I could be mistaken on that. You guys will have to let me know in the comments below. But if I'm right, this slope could get a lot steeper and look kind of more like what we see with Apple going on here. So as far as share buybacks go, I'm going to give that to Apple. And then next, guys, I want to take a look at the net debt for both of these companies. So Apple has historically had a negative net debt, which is really good, but you can see just from this chart right here, this is closing in on zero. And it would be great if this stayed in the negative, but we can see that this is really trending not really in the best direction, but still a negative net debt is good. And I actually think this is different than what we're seeing with Microsoft. In fact, theirs does seem to be getting farther away from zero here in the last, handful of years since 2017. And really, guys, this is not the end all be all by any means. I mean, there are so many other things to consider with these companies. That's why it's good to take a look at all the things that we have looked at. The price performance, the dividend stats, the valuation, the revenue, the shares outstanding, stuff like that. You have to look at the entire picture to really come to a conclusion. And now with that said, guys, let's take a look at the levered free cash flow of both these companies and see how that's trending. So starting with Apple, once this loads, we are going to scroll all the way down to the bottom and find this levered free cash flow right here. And we can see from this chart, it is moving in the right direction. They just have so much levered free cash flow, it's not even funny. $73 billion in levered free cash flow just this year so far. And then going to Microsoft, looking at the same thing. Also in a great shape as far as levered free cash flow goes. This is going up and up and up. All right, guys, and now that we've gone through all of that and compared those two companies side by side, it's time to answer the big question, which one is going to make for a better investment? Now, it's tough. With these two companies in particular, I find it very tough because I think they both have a lot of different things to offer. If we're just looking at the numbers, guys, honestly, I like Microsoft better. I like the dividend. It's obviously doing very well in terms of capital appreciation. They've got a beast of a cloud company going on that it continues to grow and bring in more revenue, which is awesome. They've got a lot of great hardware and software, as obviously Microsoft Office and everything under that, as well as PCs and the Xbox and different phones and stuff like that. So Microsoft has just a lot of great things going on. But on the other hand, guys, Apple products are just iconic and they have such a hook on their customers, including myself. I'm all Appled out. I got the iPhone, got my MacBook right here. I have an iMac over there. I've got the Beats headphones. I've got an iPad somewhere around here. I had the AirPods, but those kind of burnt out on me because I used them so much and loved them so much. But Apple just makes incredible products and they've got such a strong brand. And that is obviously very important. So I do think that they have that over Microsoft personally. But as an investment, I'm liking Microsoft better. But that's just me personally. I know a lot of you guys out there are going to probably be on the other side of this and have your reasons for why Apple is a better investment, and that is totally fine. I'm sure your reasons are totally justified, and it's tough to say. I mean, I think at the end of the day, they are both great investments. And if you have both in your portfolio, I think you're gonna be pretty well off. But that's really not the point of this video, guys. I really intended to go through everything side by side and draw some sort of conclusion at the end as to which one, if you had to choose, if you absolutely had to choose between just one, to figure out which one would be the better investment. I'm going with Microsoft. And with that said, I want to know your guys' thoughts in the comments below. If you had to choose just one, if you had to, I know it's tough, which one would you choose, Apple or Microsoft? Comment below and let me know. All right, my friends, now with that behind us, we are going to move on and get into the Q&A segment of this video. And we have two really great questions lined up for today. The first of which comes from Taylor Green, who wants to know, what would be the #1 stock you would want to add or add to if we got a crash? Only one, LOL. I think I would have to choose McDonald's with Procter & Gamble closely behind. Yeah, those are two great ones. And this is obviously a very tough question to answer because off the top of my head, I can think of 4 stocks sitting on my watch list that I would just love to have in my portfolio that I think are kind of overvalued. #1 is Lowe's, ticker symbol LOW. Another one is Pepsi, PEP. The third one is Costco, COST. And then the fourth one is Microsoft, MSFT, the stock we just talked about. Now, those are the 4 that I really have my eye on. And if I can, I'm going to pull the trigger on all 4. But that wasn't the question. If I had to choose just one out of those 4, which one would I choose? And I would say, just narrowing it down to 2 real quick, that might make it a little bit easier. It would be between Microsoft and Costco. And between those two, if I had to choose just one, I probably would lean more towards Microsoft just because that one's been teasing me for so long. But with that said, Costco is such a beast of a company. And if that one goes on any sort of discount, I'm definitely swooping up as much as I can. But yeah, if I had to pick one, I probably would go with Microsoft. That was a great question, Taylor. Now moving on to the second one of the day, which comes from Mindagus Gibus. I know I completely butchered that pronunciation and I sincerely apologize, but this individual wants to know, when did you start your journey? When did you start your investing journey? And I'm going to try and keep this as concise as possible because I'm the world's worst storyteller. I really am. My friends make fun of me for it and have done so for years. Bear with me as I try and explain kind of the origin story of how I got into investing and also specifically dividend investing. So I'm fortunate enough to kind of have grown up around this stuff a little bit. My parents are super big into investing in stocks and real estate and other things like that. Just investing in general, they're very big on. And from a young age, I don't know exactly how old I was when they did this, but they made custodian accounts on Charles Schwab for myself as well as all of my siblings. I have a handful of siblings. And so from a young age, we all got custodian accounts. And from then on, anytime we had birthdays or Christmas or whatever, anytime that there was a gift to be given, for my parents, it became money to invest in Charles Schwab, which as a young kid, it's like, it's the least exciting gift that you can receive. And it was kind of the running joke in the family, like every time, you know, there's Christmas coming around or birthdays or what have you. It was like, oh, I wonder what we're going to get this year. Oh, you know, it's going to be Charles Schwab money. Oh, and my siblings and I we were never excited about that. And like I said, it became kind of a running joke in the family. And whenever it was brought up, my parents would just say, oh, well, you know, you'll thank us someday for it. You'll come around someday. You'll see why it's such a good gift to give or a good gift to receive. And I've got to say, they were completely right. As much as I hate to admit it, they were absolutely right. And now today, you know, years later, as I'm 28 years old, I'm very thankful to have had that and been exposed to that from a young age. And just so you guys know too, I still receive that to this day. I mean, we have Christmas coming up. I know I'm going to get some money for Charles Schwab. Every birthday, I get some money for Charles Schwab. And I got to say, it is probably my favorite gift to receive these days. I really look forward to it. And it's just so funny. So funny to me when I think about it, how that's come around, because like I said, when you're a kid, it's just the least exciting gift you can receive. The last thing you want is just money to throw into stocks. Like what 12, 13, 14-year-old cares about stocks? Like very few, I would imagine. And now let's move forward to dividend investing. I really probably started to take an interest myself in investing, I would say 3 or 4-ish years ago. And in addition to having my Charles Schwab account, I started putting some money into Acorns. And then I learned a little bit more about what I was doing and felt like I wanted more control. So I moved that over to Stash, which, you know, allowed me to pick some more stocks and some different ETFs and stuff like that. And then I learned a little bit more. Then I jumped over to Robinhood and started picking all of my stocks individually. And that's when I really started getting into dividend investing. For some reason, I don't know how I first stumbled upon it, but the idea of creating passive income through owning stocks that pay dividends was really attractive to me and still is today, obviously. And then earlier this year, if you guys have been watching me that long, you'll know I transferred all of my money out of Robinhood and combined my Robinhood and Charles Schwab accounts into the account that we look at today, that we get to see every single week. So that's really my investing journey in a nutshell, guys. It's been a long one, but really just being super active with it has only been something that's happened the last couple of years or few years for me. And for those of you who are on the younger side and maybe considering getting into investing or playing with stocks or whatever, I'd highly recommend it, like in some capacity, even if you're just dumping money into ETFs, which is probably how you should start. I would highly recommend it because it will make such a huge difference in your life. Maybe not today, maybe not tomorrow, but 5, 10, 15, 20 plus years down the road, it's gonna make such a huge difference. Anyway, with that said, guys, that pretty much wraps it up for today's video. We covered a lot of solid ground. Now, before you guys click on to the next video, if you have not done so already, don't forget to leave a like, leave a thumbs up on this video. And if you're not sick of me quite yet and would be interested in seeing more dividend stock investing content from me, go ahead and hit that subscribe button. I'm putting out 2 videos every single week on the topic of dividend stocks. I upload every Wednesday and every Sunday, and I would love to have each and every one of you along for the ride and to have you be a part of my dividend investing journey. And last thing, if you guys would be interested at all in joining the Dividenders Discord group, please do so. There is a link to join in the description of this video. And essentially what that is, for those of you who are not familiar with it, essentially it's just a big group chat filled with now over like 230 dividend investors. And in there, we just talk about dividend stocks and share our portfolios and share stock news and ask questions and learn from each other. It's a very positive community. It's a very good way to connect with other dividend investors out there because really, guys, we are few and far between. I can say personally, guys, I don't actually physically know any other person who is a dividend investor. I know some other people who like dabble in stocks. I mentioned my parents are into stocks. My girlfriend does a little bit of investing herself, actually, which is pretty cool. But I don't know anyone who's gung-ho about dividend investing personally, outside of what I'm doing here on YouTube and in the Discord group. So sometimes, guys, the dividend investing journey can be a lonely one. So it's helpful to have a like-minded community behind you. And that's exactly what the Dividenders Discord group is. So if you'd be interested in joining, the link is in the description. Totally free to join. You just need to click the link and it'll take you right there. Whew. And with that said, guys, I will now get out of your hair. But thank you once again so much for watching this video. I really appreciate it. Hope you guys have a great day and I will see you in the next one.